All right, everyone, welcome back for the episode of Carnivore Trades. Today is Wednesday, August 7th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it today. So a little bit of a kind of a gap and crap type session here for the markets. I talked about this key level yesterday, and that was the line in the sand here. So we did rally up into that. And by the way, again, the levels lately have just been working really well, especially for day trading and scalping. We did get a short off in the Qs this morning, and right at the lows too. We had some members taking. I didn't get filled, but some guys did. Right at that 618 here at 5,200 on the SPX. These day trading levels are working really well right now for this market here, and the volatility is very nice. But either way, we talked about that line in the sand, 53.25. And I mentioned this morning on Twitter, like, you don't really, like, we're trying to base here, but we're probably going to need more backing and filling, and that may even just be a pretty good size dip, which is what we're getting right now. I don't think if you're a bull right now, you even really want us to be up today, or at least like not in the biggest sense, because you know that gap up, people chase that gap. Like if we tried to break through this, people would have gotten very bullish. We would have gone to 5,400, but that would have been met with a big rejection, and possibly one that could have been considered a healthy bear retrace, honestly, at that point. You don't want to go up that high in 3 days' time. One of the things that I'm looking at too is, just to throw this out there, I think you kind of want, if you're bullish here, you don't want that level breaking just yet. Courtesy of Jim Bianco here. Again, Investor Intelligence Survey, 2-week change is the biggest since 1987. So more people got bearish in the last 2 weeks than the GFC, than COVID, than Volmageddon. So I think for bulls here, you actually kind of, and I said this yesterday too, like if the bears come and slice this down really hard, if they could slice it, we could go to the 200. There's nothing saying that can't happen, but it's, the VIX already hit 66, right? How much more can we really expect from that unwind? And liquidity right now is already at pretty much historic lows as well. So another thing here to look at, again, courtesy of Markets and Mayhem, my buddy. Silicon Valley blow up a couple of times in 2022, and then really you got to go back to COVID. So the market is illiquid, and we're seeing these big bounces, big spreads, big bid-ask spreads, but it's at an extreme already. So for bears, you kind of want us to, I would prefer to see a rolling kind of action here. Straight down is just going to get us to max capitulation again, or max fear. But right now there's 5,200 right there. There is some ODT EGEX in that area, and again, right to the button. So we'll probably close right on that, or right above it, but you can see it right there, right on the money. So, and levels are working well, and we're now officially into that 618. It never quite hit a few minutes ago, and now it's getting there. I wouldn't take it now. It's only 5 minutes to the close, and God forbid anybody knows what could happen in the overnight these days. The BOJ capitulating, throwing in the towel. I said, I warned members about that this morning. I was like, look, it's good, but if you're bullish, you want to see us up on bad news, not good news. Not to say that being up in general is bad, but that's a sign of a bull market, is when it goes up on bad news. But either way here, good rejection. That's the big line in the sand right now. Next levels here, well, obviously 5,200, we're into that right now. We're going to close right on or at that. But next level is 75 and then 50. If 50 doesn't hold, then we can make new lows. So those are the short-term levels right now. And then obviously you've got the 200 MA down there. Definitely can't rule it out at this point. So that is what I'm looking at moving forward here. QQQ, again, already danced with the 200 moving average. And a lot of the time we've talked about this. I talked about it last year. If you'll recall, I said, look at how close we got to the 200 MA. I said, watch, they're going to come up here and they're going to spike the low. Like they'll bounce it here, and then we'll come down for it again. That has happened countless times. That's how the 200 moving average likes to work. Why? Because every amateur out there is like, oh, you could buy the 200 moving average, you buy the 200 moving average, and creates positioning really one-sided. It's got to get spiked one more time. So that could happen here with the Qs. I definitely won't rule it out. Right, up and then just kind of a spike down. By the way, this is the previous all-time high all the way down at 408 if we were to get there. So, and then obviously, 449, 450 area on the triple Qs is the line in the sand on the upside. Big squeeze if that level gets breached here. Russell 2000 again, just like everything else, gap and crap testing the 50 MA, but it does have room for higher lows. I don't know how much lower this is going to go here. I think there's a chance the spiders, and the Qs could spike the lows, whereas the Russell doesn't, just because it's down so much already. But we'll see. It held the 200. Maybe it gets spiked. Next level is about 193 or so, right where it turned around, right in this pivot area, 192.50 to 193. Diamond here, again, testing the 50 MA, testing that same level and backing off. So same thing going there. 200 moving averages below that as well, if we do continue down. SMH here, again, same setup on everything. So we tried to break above the highs, and we came back in. Still a lot of support down here, though, in that 200 to 195 area. IGV was really strong on the open today. Back tested the 200 and backed off. We did sell our CrowdStrike. We had this with the swing service, got about 13% on that. So that was nice, gapping up into the 240 area. There is room for higher lows on this, and I still like CrowdStrike in this area. If that can put in some type of higher low. Look at that, 618, 100 and 200 moving average right in that area. Or excuse me, 50% fib. Not the 618, but either way, very nice retrace. That one has room for higher lows if that can stabilize. But IGV, again, back testing the 200. We'll watch this here. There's room for higher lows on this too, but it's going to depend on the market overall, obviously. Dow Transport's retracing again. I think we had Wynn Resorts after the bell, so that was... Oh, that managed to gap back up, so that recovered. But it did come back in by the end of the day. I think there was somebody else in that space reporting today, but it's not that big of a deal right now. Down 1%, though, still above yesterday's low. So, relatively speaking, it's holding up for now. Yields here, so you can see the yield curve unwinding. I think this is still a positive here for the market. Not saying that this happens, the market's going to be green. Obviously, we were red today, but I think it's the fact that yields are up with the yield curve unwinding is more of a positive than a negative at this point. Because if yields are crashing and the yield curve is unwinding, that's a huge negative, right? But if yields are up, or at least like modestly kind of hanging in there, that's better for like the soft landing narrative, right? Not that anybody thinks that we're having one anymore, but it's just more conducive for that. But yields bouncing here. I think the 10-year one has a date with the 20 moving average. We'll see if it could even get there tomorrow. We had an auction today. It was not good. Same thing with the 30s tomorrow, so we'll watch that. But yields definitely bouncing here. And yeah, 2s, 10s right back to almost positive. 3-month 10-year is still way off. So that one still has a long way to go, but 2s, 10s coming back. All right, XHB here down 2.6. Again, I talked about 110. We hammered it, and we came back in. That's still the big line in the sand for the XHB. If we break through that, you've got the gap down around 100 to 101 and the 200 MA down there. So those are levels to watch. If that backs off, ENQ down 62 cents. This is still holding up really well. Believe it or not, this is like one of the strongest areas of the whole market, right? It's above yesterday's low. It's above Monday's low. Above the 20 moving average. That most sectors can't say that, right? Look at the spiders here. So VNQ is just stubbornly strong right now. And weekly, it's just chewing at that 200 MA. So go figure. VNQ, commercial real estate, it's one of the strongest sectors I can see out there, outside of maybe like utilities, staples, defensive areas. But yeah, VNQ hanging in there. XLF did manage to carve out a gain, even though it was gap and crap like everything else. Again, right now you still want to see it hold this pivot. Otherwise, probably headed down to 50 to 40 area. If it continues higher, there's a resistance at 42.50 to 43. KRE here down 33 cents, but again, still room for higher lows. And there's still support here with these moving averages also if it retraces further. Let me just take a fib here from this low. And so it already hit a 618. 200 MA lines up with the 786, so that could be a target if it does come back down. And then KBE here down 22 cents. XBD flat, but it did come off the highs. Oil here up 3%, good move for oil. I have no bias on oil right now, but good bid, I would say above 76. It can, rally back to 78 or so. That's really the best I can give you right now. It's holding that tail candle. It's a positive, and good bid there. XLE was holding up today. Again, a lot of sectors were holding up really well until the middle of the day when everything kind of came back in. XLE was one of them. It was actually up nicely in the morning session. Then around the afternoon, everything kind of, you can see here, everything kind of just came down in the afternoon, and that brought that down. But XLE is holding up all right. XOP with a big bounce there, kind of a pseudo double bottom. Came off the highs, but it's been beaten up so much lately. Then OIH was up a lot also earlier, but so far retesting that wedge and getting rejected. So under a little bit of pressure there. So we'll see where that closes the week. Again, that's got my interest. CCJ down 7 cents. Again, gap and crap like a lot of things. That still can get back to 42. In the short term, URNM, again, 44. NJ, 21. But NJ did hit a big level here. So that big breakout area, that got defended. So let me see if we can just line this up here. Yeah, so there's your 786 right in that area. Nat gas was strong today. One of the only things it was. Up 4 1/4. It's not bad for another advance too. The hourly is looking good. I know some of my members took this in the trading room yesterday. 210 was your first target, and we're just consolidating beneath it. So yeah, that's doing everything it should. It's not rejecting. So as long as that holds up, it can go back to 214, 215, and then maybe 220 and 230. Again, it does tend to bottom out around late summer and rallies up into October, November. So we'll see. Sellers exhausted here. Higher lows RSI, lower lows there. So good bounce there, but it's nat gas, so you always want to be careful and protect profits on that because it is very volatile, even more volatile than the markets are right now. Dollar index up 21 basis points again, helping out with yields being up. Short term 103.60, 103.88 is resistance. 102.50 is holding, and we'll leave it at that. Gold here fractionally lower. I don't see any problems with gold. I just see it backing and filling right now. Silver is a lot weaker. You have lower lows, lower highs. You might want to have a date with that 200 MA there, around 26. By the way, I still have a buy signal on SIL, but it's more so a weekly signal, but it did gap and crap like a lot of things. And the move already happened, so I'm not taking it here, but that signal is still intact. But anyway, platinum here, up a couple points, nothing to make out of that. Could be starting an immature bear flag. And then palladium here, trying to break back above, so it could be a false breakdown here. But remember, this is a thin metal, it's a thin commodity, so TA is a little bit tougher, but at face value, that's what it's doing. Copper continuing to inch lower. This is getting really attractive now, but especially because I think the trade is the opposite of what it was back in May. I think it's a one-sided short now, but we'll see. Again, I have not done anything with it, but it's definitely on my radar for any sort of signal I can get. And Bitcoin today backing off here, but still inside of yesterday's range right now. So big tail candle, a lot of demand in there, and I don't really see any problems with it right now. ETH coming back down. These big lows, sometimes they'll get tested again. In fact, we can use ETH too. Yeah, a lot of the time, look at these big lows. they get tested a lot. Right? They got to see who's weak and who's strong. Look at Bitcoin. Look at the macro low from 2022. Big reversal. They got to see. They got to see who's strong here, and then you slowly kind of go back up. Again, I'm not saying that we can't just break down, but right now there's no indication of that. It's just a weekly consolidation pattern. So let's take a look here. Did they, yeah, close right at 5,200. So that was, pretty much expected. And we closed like a few points from yesterday's low. So again, markets here, again, keep an eye on VVIX too. That did inch back up. It closed green by 1%. But it didn't really, even on that sell really all day, it just got back to like flat. Whereas the spiders closed down 60 basis points, Q's down 1%. So I'm kind of watching that too for clues here. If that comes down and vol is still going up, or the markets are going down, that's a signal here that there's a divergence. But as long as that remains elevated, we're likely to see a little bit more of a sporadic market, a little less liquid market. But be aware of this liquidity that's low right now it's at a historic, extreme. So just be aware of that here. It's probably not going to last very long. But right now, bears control as long as we're below 53.25. And bulls, obviously, you'd want to see a higher low and go up and retest. But if we do inch down, or if we do break down in a sharp manner here, I think we get to max fear again pretty quickly, just based on how this is set up. If you're a bear, you kind of want to see it like cool this off first, right? You just hit daily oversold and you're just bouncing now, so you don't want to see us go back down there again. Otherwise, likely, it's not going to last. But either way, let's wrap it up here, guys. You guys take care. Come find me on carnivoretrades.com. I'll see you guys all tomorrow.